Here are the main review points for Chapter 3, Fundamentals of Income Taxation. The basic tax formula for individual taxpayers states that your taxable income equals your income less your deductions. Gross income includes all income items that must be reported on your federal income tax return and that are subject to obvious federal income taxes. We classify deductions as above or below the line. Deductions for adjusted gross income are above the line, and deductions from adjusted gross income are known as below the line deductions. The amount of taxable income that is subject to tax at each tax rate depends on the filing status of the taxpayer for the tax return. Taxpayers may be subject to an underpayment penalty for not having enough federal income tax withheld from their earnings throughout the year. Quarterly estimated tax payments are often made by individuals who are not subject to withholding by an employer. Like tax withheld, taxpayers can receive a credit for their estimated tax payments made during the year, and these estimated tax payments are often made by self-employed individuals or individuals who have certain other business investment income that may not be subject to tax withholding. Most individual taxpayers report taxable income based on the calendar year. Sometimes a taxpayer, which is usually a business, would report their taxable income on a fiscal year. That means that it doesn't end on December. It starts or ends at another time outside of the calendar year. A married person normally chooses between two filing statuses, either married filing jointly or married filing separately. Only when a married taxpayer qualifies as an abandoned spouse may that taxpayer use a head of household as their filing status. To calculate net unearned income, we take the amount of unearned income of a child under the age of 19, or if they are a student under the age of 24, that is subject to tax at the trust tax rates. Note that an automatic 6-month extension, which is filed using Form 4868, does not grant the taxpayer an extension on the time to pay the tax liability. If the gross income of a taxpayer is less than their basic standard deduction and any additional standard deductions for the age, then that taxpayer may not be required to file a tax return.